guys, welcome to Talking Money with Nozi, Personal Finance Made Simple. In today's video, we are going to be talking about investing in South African bonds. I made this video after someone requested me to talk about the new South African bonds that have been issued by EasyEquities recently. Let's discuss a few definitions about bonds first. What is a bond? When a company needs money, they have multiple options. The first option would be to get a loan from a bank. Another option would be to issue more shares. A different option is to issue bonds. Bonds allow companies and governments to borrow money from the public. So basically, a bond is a loan that you, the investor, makes to an institution that issues the bond. In the case of government bonds, it's the government that issues the bonds. If you buy a government bond, you are lending the government money. And just like any loan, the issuer of a bond has to pay back the borrowed money. They also have to pay interest to the buyers of their bonds. This means a bond investment will pay you interest annually and then repay your initial investment, called the principal, at a specific date in the future, which is called the maturity date. How can investors buy South African bonds? The first way is to buy bonds directly by buying RSA retail savings bonds. Okay, so first you go to the retail savings bonds website, which is rsaretailbonds.gov.za. So retail savings bonds are a direct way for investors to invest in SA government bonds. So there are three different types of RSA retail bonds. There's the fixed rate bonds available for 2 years, 3 years, and 5 years at these interest rates per annum. Then we've got the inflation linked bonds at 4.5%, 4.75%, and 5.25%. And guys, your capital is adjusted by inflation. So this is over and above the inflation adjustment. And then there's the RSA top-up bond, which is a 3-year bond at the rate of 10%. The minimum investment for the top-up bond is 500 Rand, whereas for the inflation-linked rate as well as the fixed rate, the minimum is 1,000 Rand. You can buy these bonds at any South African post office or directly here online. You just come to the website and click on register. I have a video about how to invest in these retail bonds. If you didn't watch it, simply click the link which is appearing on your screen right now. The second way of buying bonds is through the secondary market. On the secondary market, bonds are bought and sold between investors through a stockbroker like EasyEquities, for example. Bonds on the secondary market are bought and sold just like stocks or ETFs from one investor to another and not directly from the bond issuer. EasyEquities offers 3 types of bond investments. The first type of bond investment on EasyEquities are local and international bond exchange traded funds or ETFs. I've just logged into my EasyEquities account so that I can show you bond ETFs. Bond ETFs are baskets of local and international bonds with different maturities and yields. They are available in the ZAR, so I'm going to show you. If I click on Invest Now, then go to ETFs and search bond. You see here are the bonds that come up. So Global Aggregate Bond, S&P Namibia Bond, SA Bond, Wealth Govy Bond, etc., etc. These bond ETFs are also available in the tax-free savings account or TFSA for short. So if I click there, click Invest Now, and then type bond to search, you'll see the very same bonds that we saw in the ZAR account as well. If I click on the EasyEquities US dollar account and click on ETFs and search bond as well, you will see the bonds that are available as well on the US dollar account. These are all of them. So the iShares bonds as well as Vanguard bonds. Same applies to the Australian dollar account. If I click there, select ETFs, search for bond, you will see these are the bonds that are available on the Australian market. Let's have a look at the South African bond ETFs. I'm going to click on the Satrix Global Aggregate Bond because I want to read more about this bond. So we're going to click here where it says EasyETFs so that we can read the minimum disclosure document of this bond. So I'm going to scroll down and select where it says download the fact sheet. And I'm going to zoom it in so that you can see what's written over here. It says the Satrix Global Aggregate Bond ETF is an index tracking fund. Okay, we know that. It says the mandate of this index fund is to track as closely as possible the value of the Bloomberg Global Aggregate Bond Index in ZAR. The Bloomberg Global Aggregate Bond Index offers direct investment in global government, government-related, corporate, and securitized bonds that are of investment grade quality or better. So it's telling you what this ETF is investing in. So it's international corporate and government bonds, right? And you can see here where it says top 10 issuers. So what bonds are you investing in? So it's the United States Treasury, the government of Japan, right? Federal National Mortgage Association, that would be American, China People's Republic, the government, Republic of France, Italy, UK, etc., etc. So you see, you'll be investing in international bonds if you bought this ETF. Let's go back and look at another bond ETF, which is this one, the Satrix SA Bond ETF. If we have a look at this one, scroll down, go to EasyETFs. I also want to look at the fact sheet for that. So we scroll and click on download fact sheet, zoom in so that you see what it's about. It says the mandate of this ETF is to track as closely as possible the value of the S&P South Africa Sovereign Bond 1+ Year Index. The Satrix SA Bond ETFs provides investors with South Africa government bond exposure as an asset class. Here where it says top 10 holdings, these are South African bonds. So you've got these different bonds with the different coupon rates. So there's the R186 with the coupon rate of 10.5%, the R2030 with the coupon rate of 8%, etc., etc. So if you buy this Satrix SA Bond ETF, this is where your money is invested. The second type of bond investment on EasyEquities are bond unit trusts. These are also baskets that can hold local and international government and corporate bonds chosen by investment managers. Next, we're going to look at bond unit trusts. Bond unit trusts will usually have the words income fund in the name. So we're going to look under unit trusts this time. So in my ZAR account, click on unit trust and then select income funds. These are the different income funds. As you can see, same applies to the tax-free savings account. If I click there and then select unit trusts and click on income funds, you'll see the very same ones that you saw in the ZAR. As an example, let's have a look at the minimum disclosure document for this Coronation Strategic Income Fund, for example. So I'll click there and then click here where it says MDD. It stands for Minimum Disclosure Document. Basically, it's a fact sheet so that you understand what that unit trust is all about. So if I zoom it in, this is what it says. So this is not a pure bond unit trust. It's going to have other asset classes in there. So it says strategic income can invest in a variety of assets such as cash, government and corporate bonds, inflation-linked bonds, and listed property, both in South Africa and internationally, in a manner similar to that employed by retirement funds. Okay, so let's have a look at the portfolio detail. What is in this unit trust? So you can see here it says cash and money market. So these are cash and cash equivalent investments. This is how much. Then it says floating rate bonds. This is the percentage. Fixed rate bonds, this is the percentage, inflation linked bonds, etc. So you can see that this ETF invests mostly in bonds because this is 22%, 21%, 16%. So if you add all of that, that's quite a high percentage of bonds in this unit trust. The third type of bond investment on EasyEquities are the recently launched South African government bonds. The third type of bond on EasyEquities, which is what this video is about really, is the South African bonds, which have been recently launched. So if you go to your TFSA, click under where it says bonds, you're going to see those bonds. So these bonds are available both in the ZAR and the TFSA accounts. And there are 5 of these bonds with different coupon rates and maturity dates. So we have this one, R186 bond with the coupon rate of 10.5%, and it matures on the 21st of December 2026. Then there is this bond, the R2030 bond with a coupon rate of 8%, and it matures on the 31st of Jan 2030. Then we have this R2035 bond with a coupon rate of 8.875%, and it matures on the 28th of February 2035. We've got this R2040 bond with a coupon rate of 9%, and it matures on the 31st of January 2040. And lastly, this R2048 bond with a coupon rate of 8.75%, and it matures on the 28th of February 2048. Next, let's talk about how these new South African bonds on EasyEquities work. Just like shares and ETFs, these South African bonds also have prices. The price of a bond when it is issued is called the face value of the bond. In the same way that shares and ETFs can be bought and sold after they are issued, and the prices of those shares and ETFs change based on supply and demand, the prices of South African bonds also change based on supply and demand. This means you could pay a price that is higher or lower than the face value of the bond. Let's talk about income from South African bonds. When you invest in South African bonds, you will receive fixed interest payments twice a year. This yearly interest rate is called the coupon rate. For example, if a bond has a coupon rate of 10%, you will receive 5% interest every 6 months. You can reinvest the interest payments back into your bonds, or use it to buy other investments, or you can withdraw the money into your bank account. To qualify for the coupon, you need to buy the specific bond before the last day to trade, which is shown in the description for each bond. So to check for the last day to trade for each of the bonds, you can simply click on that bond and read the description, what it says. So this one says, let's see here where it says show more. So this is for the R186 bond, right? So it says to qualify for the semi-annual coupon, you need to have a holding in this bond as at close of business 4 business days prior to 11 June and 11 December each year. Let's have a look at another bond, the next one. What is the LTD, their last day to trade? Let's have a look. It says to qualify for the semi-annual coupon, you need to have a holding in this bond as at close of business 4 business days prior to the 21st of January and the 21st of July each year. So for each and every bond that you want to buy, just check when is the last day to trade in order to qualify for the coupon payments. Let's talk about the current yield of a bond. The current yield of a bond is the annual interest or the coupon rate of the bond divided by its current price. This is how current yield is calculated. Let's say the face value of a bond is 1,000 Rand and the coupon rate is 6%. This means the annual interest is 60 Rand because 6% of 1,000 Rand is 60 Rand. The 60 Rand in annual interest is fixed regardless of the price paid for the bond. If an investor buys the bond for a price that is lower than the face value, let's say 900 Rand, The investor earns the annual interest income of 60 Rand. Therefore, their current bond yield is 60 Rand divided by 900 or 6.67%. On the other hand, if an investor buys the bond at a price that is higher than the face value, let's say 1,100 Rand, the current yield would be 60 Rand divided by 1,100, which would give a yield of 5.45%. Then there's the maturity of the bond. Just like all loans, bonds also have an expiration date, after which the bond issuer has to pay back the borrowed funds. The maturity is the date when the money that you invested, called the principal, will be paid back to you. The maturity of the different South African bonds on EasyEquities is 3, 7, 12, 17, and 25 years. But on EasyEquities, you're not forced to invest until maturity. You are able to buy and sell the bonds anytime when the stock market is open. Lastly, guys, please don't forget about taxes. If you buy South African bonds inside your tax-free savings account, or TFSA for short, you do not pay tax on the interest that you earn. But if you invest outside of your TFSA account, for example in the ZAR account, then you may have to pay income tax depending on how much interest you earn annually. If you are below the age of 65, you will pay tax if you receive interest of more than 23,800 per year. And if you are above the age of 65, you will pay tax if you receive interest of more than 34,500 per year. If you're not sure what your rate of tax is, you need to go to the SARS website to check for the rate of tax for individuals. This is the current tax for our current tax year, which started on the 1st of March 2023 and it's going to end on the 29th of February 2024. So you can see that the income tax ranges from 18% right up to 45%, and you are taxed according to how much you earn in total per annum. Okay guys, that's it for today's video regarding South African bonds. I hope it was helpful and that it was clear and easy to understand. If you have any comments or questions, please type them in the comment section below and I'll get back to you as always. Also, please remember to like this video and subscribe to my channel. I'm going to see you in the next video. Bye guys.